Always great to see you. So let's start with the basics, all right? S&P 500 sitting right below that 3,000 level. Does that big, round, fancy number mean anything to you? Because I know people like to freak out about this stuff.
It doesn't mean much to me in terms of a round number, but there is a line that you can draw that you can connect the January 2018 highs, the highs last year, and it comes in just over 3,000 now. So it's just probably a bit of resistance based on that line. It's also a bit of resistance based on the fact that we're overbought or we're heading into an overbought reading, and sentiment got a little bit giddy last week.
You know, speaking of sentiment and breadth, the number of companies at 200-day moving averages is getting close to where it was in January 2018. I know you like to look at the number of new highs on the NYSE. What do you see there, Helene?
Well, we peaked with a number around 320 new highs about 2 weeks ago, and we've not been able to exceed it in this last push up that we had in early July. So my sense is that there's a lot of stocks that are getting tired. We're losing some upside momentum, and we just need to regroup.
All right, and we're looking at the breadth there. That's my contribution to our discussion here, the 200-day moving average. Let's get to yours, Helene. I know you like to look at equity put-call ratio. Let's start there. Remind us again why this one's important to you and what it looks like right now.
Okay, so I look at the equity put-call ratio on a 10-day moving average, and you can see that it is now down near the lows, under 60%. And generally speaking, once we get down in this area, the market has a tendency to struggle a bit, or at least have a correction of some sort. So that's what I'm looking for now. It could be just some sideways action or some short-term downward move. I don't think it's terribly negative on an intermediate term basis, not yet. And that's because some of my other breadth indicators are not rolling over. And generally they will roll over well before the S&P will. So in this case, I just think we got a little too giddy last week.
Okay, now I like this because these kind of make sense together, right? This is essentially gauging, maybe not, position. Everybody's got their own way. Everybody and their cousins got a way to do positioning in the market. But the idea here is there's been a pretty sharp sentiment turn. I mean, the put-call ratio moving lower from where it was just a couple months ago, right? I mean, it kind of did like a V that's inverse to the market's V.
It's exactly that way, actually. I think you and I chatted sometime in May, and maybe the middle of May, and we looked at this, and that 10-day moving average was soaring. It was heading up because we were just getting so many high readings. Everybody was banking on too many puts relative to calls. And so as we've levitated over the last 6 weeks, you've seen just the inverse of that. And so just to me, it needs to reset itself.
Yeah. All right, makes sense. Within this, we've now had the whole read-through about the Fed, central banks, all that stuff, but let's just do price and let's look at gold and let's talk about what you see from the technical side, Helene.
On a long-term basis, you can't deny that the chart of gold looks great, but I've got to say that we also got sentiment way too giddy a couple of weeks ago. There's a sentiment indicator, the daily sentiment index, which got to 96 about 2 weeks ago, and gold basically hasn't had much upside since then. So you need to work that off. You need to see that come down. I wouldn't mind if the gap filled on that chart of GLD, but in general, you need to work that off before you can have a decent rise again.
This, to me, just from a layman's perspective on the chart, when I connect it also with what we've been talking about on the fundamental side, is a little bit concerning then for the gold bulls that want to try and ride this wave. I mean, that was such a big move in terms of the gap where it jumped to the upside. Is it necessarily a bad thing if it closed it, Helene, or is your point just, look, it kind of needs to consolidate before maybe the next leg up?
Well, I don't care if the gap fills, it's actually bullish. What would be bearish is if you gap down back under that gap, because if you do that, then you're going to leave these last few weeks as an island overhead, and that's bearish. Yeah.
Okay. Now, when we look at the picture for the oversold, overbought nature, we were talking about some breadth indicators. You look at an oscillator on the NASDAQ. It doesn't look too extreme in either direction, does it?
No, but the way I use this is it's the 10-day moving average of the net of advancers over decliners. And so when I look at what numbers we're dropping from 10 days ago, I can sort of anticipate when we're going to be overbought or oversold. And we are going to be overbought towards the end of this week. So what we've got here is a market that's heading into an overbought reading, and you've got coming up overbought reading. You got a little too optimistic in the market late last week, and you've got that resistance just over 3,000 in the S&P. So I think the next few weeks, even if we get another rally this week, which quite frankly I think we should, I just think the upside becomes limited.
Interesting. Now, to put this in perspective, because we got a lot of different kind of ways to gauge sentiment, you also look at a daily sentiment index. And for the S&P, I thought you had an interesting point, which is that it's not really what it was back in April, right before we went into our really only one corrective moment of 2019, which was the month of May.
Yeah, well, it got to last week on after Wednesday's action, we got to 92 for NASDAQ and 90 for the S&P. And to me, readings over 90 are just, it's no longer worth it to buy. And it doesn't mean that you can't keep going up, but generally speaking, you need to, again, you need to have the market pull back and you need that sentiment to cool off.
So when we say the cool off, do you, Helene, look at targets? Do you say, hey, it's this amount of overbought or it's this amount of sentiment? I've got an actual area in which I'll say that's enough to kind of unwind the frothiness maybe that's built up over some time period.
For me, it's always about the indicators and not levels on the market. As a matter of fact, when we get to specific levels on the market and you break out on the upside, it's if the indicators don't confirm that breakout, then it's not very bullish. And it's the same way on the downside. When we broke all those prior lows in late May, everybody got really bearish. But really, that was an opportunity because all the indicators got so oversold and sentiment got so bearish. So I'm not that strong on worrying whether or not we have to hold a certain level. And often I like to break that level just to sort of see what's out there.
I see. My big takeaway from this, Helene, is that when you go through the suite of indicators, the deep bearish narrative we heard about people holding back in the market, that's changed, right? I mean, that's basically the takeaway from this, that type of hesitance by investors is not the same as it was just a couple months ago.
Well, right. I think that the June rally obviously changed everything, and people went from bearish back to bullish again. And my guess is just based upon what we saw yesterday and all the chatter that came out, that if we sell off here, we'll probably get people back negative again. I think we're just in that kind of environment where everybody gets skittish and then they get bullish and then they get skittish and then they get bullish. It's sort of been that way for 18 months.
I agree. Yep. Hey, Helene, before we let you go here, I love the charts. What's the one behind you? Is that the transports or something? What deserves the spot on the wall?
It's actually, I chart by hand. And so I throw away old charts after they get bought out, or I stop doing them and I just put them in a pile. That happens to be the chart of Barrick just before they merged recently.
All right, there we go.